Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 21st. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis, and I do the same thing in these daily market commentaries, but I'm going to go a little bit further for you folks and talk about the option strategies I find in order to implement into my portfolio based on those assumptions we come up with. So, without further ado, let's get on with the economic data and see how that's impacting the overall markets right now. And we have some geopolitical stuff going on this week as well. Probably going to be one of the biggest drivers because this week is going to be pretty light for economic data other than the housing, which we have seen doing very well. What's really driving these markets right now? Well, it's not really the economic data. We do have Powell, Bernard, and Williams speaking today. Also, over the weekend, we saw some really new rounds of coronavirus starting to break out over in Europe, and that's impacting the overall markets here in the United States. We're starting to see that stay-at-home trade start to reinvigorate to the upside, if you will, or at least they're the ones that are holding on to their gains. Well, we're seeing the reopening trade where we're seeing like the transportations and some of those other names like that are really starting to suffer. My Coca-Cola is not doing so well, so I'm going to talk about some trades that I'm really looking at there. But really what we're seeing here is the reopen trade not really working out. So it's going to be some opportunities here with these tech names that have really seen a massive rally. I think you're going to see some of the Wall Street kind of people or Wall Street traders start to get out of some of those tech names and reallocate into things like Honeywell and other things that would be closer correlated to a reopening. All right. So without further ado, let's move on to the trading platform here. We've got crude oil coming off by about $1.87. Again, crude oil is definitely going to be impacted if we start seeing more stay-at-home type of situation. People are going to be driving. Manufacturing is probably going to suffer. All right, so we're seeing crude oil come off a little bit today. Also, we aren't seeing a whole lot of information on the stimulus, right? That should weaken the dollar. Well, we're seeing gold really fall out of bed. I was expecting it to hold on to 1923. Not happening today. As a matter of fact, it even broke below the 1900 handle, which is a major psychological level. You can see our low of the day is 1885 there, and that was created not too long ago. Now the rest of the broader markets, we're starting to see a little bit of a bounce here, but most of the equities now are below the 50-day simple moving average, and that is going to show further weakness there. Some people are even talking about head and shoulder patterns, everything they can think of to talk about this correction here. I don't think it's going to be just today. I think we're going to see some more weakness in the equities going forward this week. All right, so we've got the bonds up 24 ticks on the day. Back up into that value area I've been talking about, wanting to stay above 176.20-ish, and we are just slightly above that right now, and I'm expecting it to start pushing back into 177 handle here this week, and possibly even pushing and testing that 180 handle that I've been talking so much about, because it's not going to be a situation where we start raising interest rates, especially if we start seeing more shutdowns across the pond, and then we are probably surely to follow suit. Now the VIX is positive on the day by about 3 ticks here. We were up into the 30 handles earlier this morning. Now that we're starting to see a bit of a bounce happening in the equities, we're seeing the VIX come off as well. So let's take a look at the Dow Jones Industrial Average, off by about 860 some odd points. And a lot of people are talking about this, breaking down through the 27 handle, and we've gotten below the 50-day moving average today. It does not look like we are going to recover that. I doubt very highly that we would be able to rally and finish above that 170 back up into the 27 handle, let alone get back up above that 50-day simple moving average. What's happening? We're right at the point of control where the most time and volume has been spent. That is a comfort zone for equities. Despite the fact that we are seeing this massive pull down in the equities, we have come down right to the point of control. Now that's where the most time and volume has been spent for at least the last 52 weeks. That is going to be someplace where we start to see this market settle down. So what we're talking about with a head and shoulders pattern that I mentioned earlier, and the Dow Jones I think gives one of the better representations of that. But you can see here what we generally speaking talk about with a head and shoulders. We would say this is the head. Here is one shoulder. This is another shoulder, and then you also have the neckline, okay? So breaking below that neckline, really showing that correction there, but we do simply have a pretty good head and shoulders there. And again, moving back down to the point of control, which is going to be key. Now, we also have this 200-day simple moving average right here. Simple moving average, which is lighting up right there. That will be key to show support. Otherwise, we will look to test that 2,500. That is lining up nicely, as you can see here, with 2,600, the 200-day simple moving average. But anything below that, we're probably going to look to retest some of that value area low there in the Dow Jones. Now let's move over to the NASDAQ and see how it's faring. We're starting to get a bit of a push back in NASDAQ. It's been the lagger of all of the equities. And that's because we're talking about if we're at a stay at home again, we're going to see things like Netflix. We're going to see things like CRM, work. All of those stocks are going to be pushing higher, and some of those were the ones that were really the ones that were holding on to some of their daily gains anyway. But then on the flip side, we're going to see Disney, AMC, United Airlines, American Airlines, Southwest Airlines, especially obviously the airlines. If we start seeing another shutdown and or people start really worrying about that travel sector, all right? The other side of the coin, the RVs, Thor Industries, which creates the camper trailers, are doing very well. And as a matter of fact, I've talked to people that I never thought would really be RVing it, are looking at purchasing something like that. So those people are the RV industry is finding a new consumer right now. All right, E-mini S&Ps down 76 points. Again, we broke below the 50-day simple moving average and settled below that Friday. Now this 23 Fibonacci that we're talking about here, really not holding on to anything. It just ripped through that like butter. Why? Because we've got the point of control where the volume nodes are split up a little bit here, but point of control being down here lined up nicely with the 200-day simple moving average. That is something we need to keep an eye on going forward. That is right around 3,100 in the E-mini S&P. So a settlement below that 23 Fibonacci is going to look more and more like we are going to retest 3,100 there in the week or two coming here. We might see a couple of bounces here, but I think that this is where we are looking at for a target for E-mini S&Ps. Can't really see the head and shoulders here as well as we saw before, but there's the neckline and breaking below that as well again today. So we do have some head and shoulders patterns people are going to be talking a lot about. And now that we've broken that neckline is the key for that. Now, here's what we're seeing overnight. This is all of the information we were getting out across the pond, where in Europe we're seeing these outbreaks in coronavirus, which is starting to see signal to people that V-shaped recovery that we really saw could end up being a W, where we get this correction. That's going to be opportunity for you folks to get out there if you missed some of that first wave. I don't think we're going to correct down to what we saw during the coronavirus, but we definitely, I think, are due for a bit of a correction. That being said, the NASDAQ, that rotation trade that I've been talking so much about, I would, if you have held off on that, I'd hold off on just for a couple more days here to see how that rotation continues to work out. But it would definitely be an opportunity, I believe, in order to pare back some of that tech-heavy sector and start to look for some value trades going forward. But with that being said, let's get on to some things that I'm looking at. My DIA, if you guys remember, I have on a strangle in here. Volatility starting to expand as we're seeing, not with this pullback. We saw that volatility spiking. It was helping out quite nicely earlier this morning. But we're starting to see the DIA start to correct. And if you guys remember in that strangle, I basically bought the 292 calls in there because it was on the pop or drop. And then on the bottom side, I've got the 260 puts that I'm long. So right around where that 200-day simple moving average is. Here's our, let's just say this is our 260 puts there. So again, looking for it to at least come down and test that 200-day simple moving average here, at least this week, and possibly come down and test this little area in and around the lower end of that volume node, and hopefully maybe build up some of this little area that we had a little trough in there for that volume node as well. So DIA strangle starting to look a little bit better now that we're getting this correction. Again, we can see the head and shoulders pattern lining up quite nicely here. One shoulder, the head, another shoulder, and then we have a neckline there, gapping below that neckline today and below the 50-day simple moving average, which is showing some correction type territory trade that we've got going on there. So DIA working out nicely for me. And then also with that reopen trade that I was looking at, remember Coca-Cola, we've been lowering our cost basis on this. Now I've got a big correction happening today, down $1.60 in Coca-Cola. I'm going to be looking to add on some 45 puts in there. I'm not going to do it today, but if we start really tracking down towards this point of control here, that is going to be something I'm going to be looking to continue to lower that cost basis in Coca-Cola, staying mechanical with it, which I implore you all out there to stay mechanical with your trades, look for opportunities. This is going to, if we start seeing this volatility start to spike, that will be the opportunity to get in the markets, sell some puts at really good strike locations in stocks that you want to own, and that will allow you to get great strike location. We get a pullback in there. If the stock gets put to you, you wanted to own it at that strike location. We're staying mechanical. We're happy with that type of trade. And if the market never gets down there, we get to collect a so-called dividend on this stock we don't even own. So that's the beauty in trading this way. And this is the opportunity to add to a portfolio where you're not just kind of throwing darts at the board on when you should be picking the time to buy a stock. And what we're doing here is picking strike locations we're comfortable with, adding to our portfolio by dollar cost averaging if you've already had that underlying, or just getting great strike location. So all of those things is what we're trying to do here at Pro Trader Strategies. I'm trying to teach everybody great ways to implement stuff in and around their portfolio to take advantage of these type of corrections. We've been waiting for this for quite some time here at Pro Trader Strategies. I've been talking about this on the daily market commentaries, that things are seeing a little bit frothiness. The tech sector was really blowing the top off there, and like I said, some of the things like work is doing very well today. You can see they're in positive territory. Netflix, what is Netflix's? Netflix's ticker symbol. There we go. We can see doing nicely today. So the stay-at-home is doing well. CRM, I think, was in positive territory, just slightly in negative territory, but a green candle, as you can see here. And then on the flip side, we look at something like UAL, Disney. All of those names are going to be struggling today as that reopen trade is really not looking as sexy as it did just about a week or two ago. All right, so all of those names really suffering, but like I said, some of those names for the stay-at-home are doing well. If you own those, to me, this is the opportunity to start thinking about some of that sector rotation, taking profits in some of those high flyers. There's, even in this type of correction, those names might do well, but they're still going to struggle to make, let's say, all-time highs here. But while some of these other names might be an opportunity to get into, I'm not saying jump on board with AMC, UAL, Southwest Airlines, any of those. And at this point in time, I think we need a little bit more time to have all of this rotation, some of these corrections to work themselves out a little bit more. So having said that, I haven't done anything in my portfolio like selling those puts in Coca-Cola, which I am going to keep an eye on there for that type of trade. My like I said, Strangle doing well. My TLT is starting to move a little bit higher. XLK, which is something that I have some long deltas in, holding on to that type of move. Apple, I think, is even moving positive today as well. So I'm going to hold on to those a little bit longer. As you guys remember, with Apple, I sold some puts in there, which gives me that positive delta. I'm short the 100 puts in Apple, which is a great location for me, I think, as that market will try to defend that 100 level for sure. So, and if I get put the stock Apple at 100, if Apple, I get put that stock at 100 and I'm long there, I'll be more than happy to buy Apple at 100, to be honest. All right, so that's about it. That's all I've got for you guys today. Bit on the long side for a daily market commentary, but I hope you guys all had a great weekend. Please take a moment to check out our disclaimer, as we are an educational company. I'm not here to solicit you guys into my market assumptions. I want you guys to come up with your market assumptions, but then look at these option strategies that I'm talking about. Follow those guidelines, because those are the key to your success in implementing those strategies in and around something where we're trying to increase your probabilities of success. For instance, my strangle in the Dow Jones ETF DIA, where I got into that expecting a big move happening, which we're starting to get that big move happening, and that volatility expanding will help us in those trades moving forward. So trying to set it up where we turn the tables into our favor. And that's about it. All right, so if you can't take that, take it easy.